Hello traders and welcome to this week's Market Outlook from XNES. I'm Michael Stark, Financial Content Manager at XNES, and in this video I'm going to be looking at a potential idea for a trade over the next few days, some of the primary narratives that are driving that possible movement, and what traders who were to take the position would need to be aware of. But first, let's look back at the performance of last week's idea. Last week the idea was a potential buy for the Nasdaq 100, one of the main indices in the USA. That idea was partially accurate. If we look at the chart, we can see that the price did reach the target that was suggested in the idea and exceeded it slightly to reach 15,500. However, the initial entry was not triggered. Now, the idea for this week is a potential buy for gold. The price of gold has recently performed somewhat better, having recovered from the low, and it could continue to move up, possibly to test the area around 1970 to 1975, which is the area of the 20-day moving average. We can see that the slow stochastic is no longer in the oversold zone, and overall there is a larger context of an uptrend. Possibly in the longer term the price might continue to extend further up. One of the primary narratives that's driving that possible movement up by gold is continuing expectations that monetary policy is going to remain at least not very hawkish. It seems likely that the Fed is going to call for another hold in the base rate in the USA on the 13th of December. And it's also important to note, according to the commitment of traders, demand for gold among large speculators has remained relatively high recently, which has supported the upward move by gold. Now, for traders who were to take the position this week, the most critical factor is the reaction by markets to American inflation, which is due out shortly after the time of recording. If inflation remains broadly stable, as seems to be possibly expected, then it's unlikely that gold is going to move significantly downward. However, if there's a big surprise and inflation ticks up, then it might be possible that the idea could be invalidated. It's also important later in the week to be looking at American retail sales and industrial data from China, among others. So in summary, the potential idea for a trade this week is a buy for gold with a possible target around 1970. The primary narratives that are driving that movement are expectations that rates will stay stable and possibly start coming down next year, and the greater demand among large speculators, according to the COT, for buying gold. Critical release to be monitored by traders this week is American inflation, but also retail sales from the USA and Chinese industrial data could be important. Remember that this is just an idea for a trade, it's not a signal, and it's not a guarantee of success. Always do your own research and manage risk.